Hello guys, good evening. On my time, it's around 3:54. Now, I got this question from one of my subscribers. I'm going to pin the question here. It's a comment, and it's all about it's a question concerning the consolidation market. If you're supposed to buy in the consolidation market, or you're supposed to place your trades in the consolidation market. Well, for me, how personally I do understand how the financial market works. You can't really predict if the market is going to buy or sell in the consolidation market. When the price say it's ranging, you can't really identify it if it's going to go up or down. Because at that point the price it's the buyers and sellers, no one is in control in the financial market. The price is bouncing back and forth. No one is really in control in the financial market. Now, I really want to explain the detailed video. I want to do the detailed video explaining how you can get your trade on the consolidation market or in the ranging market. How you can really get your trade on those positions so you might not be left out while others are making money. Now, for those who don't know me, my name is The Don. I'm a financial market trader. I've been in the financial market for more than 3 decades trading, struggling. For those who know how the financial market works, it's not a get-rich-quick scheme. You might be in the financial market for the longest time, but then end up losing. As you all know, in the financial market, only 5 or 10% or even 1%, they are the only one who make it out in the financial market. That simply means like the only 1% can't really be successful in the financial market. It only means like 90% they really give up in the financial market when they're starting. The reason number one, they're thinking in the financial market you can be rich maybe a year, 2 weeks. They're having that mentality of like it's a get rich quick scheme. I'm coming to the financial market, I'm going to buy a car in the next 2 weeks, an year, or maybe 2 years. I'm sorry to say this, but it's really hard for you to come and think of that. It's going to give you a hard time until you come to realize this one. Today, I'm not going to explain all those things about the journey of the financial market or the journey of how you're supposed to go in the Forex market. I'm only going to explain to you how you can get your trade in the consolidation market. I got this question up here from one of my subscribers, and I decided, you know what, I'm just going to reply in a detailed video on how you can get your trade on this position. Again, this year, it's 2026, 2025. It was really a rough year because we had a lot of change in the financial market. Those who understand what I'm talking about, and I'm going to simplify it. And we came to realize that the strategy that we've been using back then in 2022, 2023, up to 2025 was really different. Now, in 2026, we're going to adapt another style in the financial market of how you can trade and become profitable in the financial market. Now, this topic today, it's going to explain the reason as to where you're supposed to get your trade. Are you supposed to trade in the consolidation market, or are you supposed to stop and watch the market until it gives you a correct way to get your position? Let's get back into the video and let me explain to you the reason as to you're supposed to buy or sell or even watch the market. Don't buy or even don't. You should be able to understand how the market really moves. We have the buying positions, we have these buyers in the market, and also we have the sellers in the market. We have 3 types of trades. You can come into the financial market and find, or even you can open the charts and find the market is buying, or the particular currency is buying, or the particular currency is selling. It's up to you to decide where you're going to get your trade. Now, you have 3 types of trades. You can find the market, it's going up, all it's going down, and when it's going up we can call that buying or even bullish. When it's going down we can call it bearish or even selling. And when the market is going this kind of a way, the slanting kind of a position, we can say that the price is ranging or the price is consolidating. I want to explain to you how you can get those trade. For instance, here I have a small example as to where I'm supposed to explain how you can identify those kind of structures. Like right now you can see that the price is going this type of way. The price is going up, it's giving us higher highs and higher lows. It's going to give us higher highs and higher lows. To this point you can see that the price is buying. Okay, you can see that the buyers are taking control all over the market. And this particular trade, because this is the buying position, obviously it's going to give you profits, and also it might give you losses. That's why we have a stop loss in the financial market. We have stop loss because you can't really, the market is going to give, all if the trade is going to be of profit up to you, give you losses. Now it's up to you to take a trade keenly and know what the price is doing at the moment. Now this is an uptrend market. Now it's giving us higher highs, lower lows, higher highs, lower lows, higher highs, lower lows, higher highs, and lower lows, and over and over and over. It's up to you to decide where you're going to get your trade in this type of a position. Now I'm going to structure it a consolidation market. This is how it looks. This is how it looks. We have the support or even the demand area, whatever you want to call it. It really looks that way. We have the support and the demand area, or even the resistance or the support area. Now it's up to you to decide where you're going to get your trade. Now let me show you. Let me draw the structures inside those the zones. I feel that the price is going up, coming down, going up, coming down, going up, coming down, going up, like that. Now to this type of a trade, you can't really be able to identify where the market is going, whether the market is buying or whether the market is selling. It's up to you to decide, or it's up to you to know what the price is doing. That's why I'll always emphasize on this. When you come in the charts, when you really open your charts, first of all, identify how the price is doing. The price could be going up or the price could be going down. It's up to you to know what the price is doing in the particular currency. Now, this is a consolidation kind of a structure. We can see like no one is really controlling the financial market. No, because you can see that the price is bouncing back and forth, back and forth, back and forth, back and forth, back and forth. That simply means it's really hard for you to identify whether you're going to buy or whether you're going to sell. Sorry. It's really hard for you to identify whether you're going to buy or whether you're going to sell. That's why I said we have three types of structures, or three types. We have buyers, and we have buyers, and we also have sellers, and we also have something called the consolidation market. This is the buyers kind of a structure, and also this one is a consolidation kind of a structure. Now I want to draw another structure when the price is shooting down, or rather when the bearish are taking control in the market. It really looks this way. You can find that the market is going down, going up, going down, going up. Now up to this point, it's giving us something called higher highs, lower lows, and lower lows and lower highs. It's going to give us lower lows, lower highs, lower lows, lower highs, lower lows, and so on and so on. Okay, it's up to you to decide whether you're going to take a trade on this kind of a position. Okay, because for me, it could be so easy to take a trade on this type of a trade, because you can see that the price is shooting down, going up, shooting down, going up, shooting down, going up. Now it's really simple for me to take a trade on this position, because you can see that the price has the direction. The price really have the direction. The price is going up, the price is also shooting down, going up, shooting down, going up, shooting down. Now it's a very nice trade, because you can see that only the sellers are controlling the financial market. We have also something called let me see. As I said before, this is an uptrend market, okay? Because you can see the higher highs and the lower lows, the higher highs and the lower lows, the higher highs and the lower lows. Also, this one is a consolidation market. No one is really in control in the financial market. No one is really in control in the market. This is a GBP card. It's a Great British Pound versus Canadian dollar. We can say that no one or no currency pair or no pair is in control in this trade. Because you can see the pound is really pushing up, and the Canadian dollar is really pushing down. So we can't really identify who is in control in this financial market. This I call it an uptrend, this I call it a ranging market, and also this one I call it a consolidation kind of a structure. This one too, I call it a consolidation kind of structure, and this one also I call it a downtrend. All the bearish are taking control in the market. Now, I really wanted to explain to one of my subscribers who commented and wanted maybe to really know where he or she could take the position to these particular places. The main question was if they can really take a trade on the consolidation market, if they can really execute in the consolidation market, yes or no. The question for me, it's like there is no way you can get your trade. You can really get your trade anywhere. It really depends which type of a trader you are, because in the financial market we have three types of traders. We have a swing trader, we have a day trader, and also you have a scalper trader. Okay, up to now you really understand how it works. If you don't know how it really works, comment down below and I really appreciate your comment, and I'll explain a detailed video of how you can take your trades on those positions, on how you can identify those structures. It really depends with how you take your trade. It really depends with how you execute your trades and how you oversee the market lookings. Now I want to take you back to the real chart and explain how the market really looks like. In this kind of a structure, we can see that the market is really doesn't really know where it's going. It's giving us higher highs and lower lows. It's giving us higher highs and lower lows. At a point, it reaches to our demand or even our support area or supply zone, and it's not really crossing those positions. Let me explain to you. You can see that the price is doing this kind of a thing. The price is going up, shooting down, going up, shooting down, going up, shooting down, going up. So up to this point, you can't really know who is in control in the market. So it's up to you to identify where you can take your trades or where you can execute your trade up to this point. Now, as I was saying, this is a consolidation kind of a structure, all arranging kind of a structure. Now, well, say you got your trade up to this point, you set your stop loss to this point, and maybe you take your target up to this point. Maybe you targeted maybe 100 pips or even 30 pips in the financial market. Yes, you're going to get your trade, but how is it guaranteed that the price is going to continue going up, since the price was going up, shooting down, going up, it broke this zone, and maybe it gave us a hint that the prices continue going up. But what really happens, it started creating a zone. It started creating a zone, this zone over here. It's started creating a zone. So and the price changed the direction. Now the price is not really going up, or if the price is not giving us the higher highs and the lower lows, the higher highs and the lower lows. Now the price have already started consolidating in this zone. Now it's up to me as a trader to decide where am I going to get the trade, because I can't get a trade to this point, and also I can get a trade to this point. I can buy over here and also I can sell over here. Now it's up to me to get a trade. But I'll always say this, don't be the first trader to execute the price. Never be the first trader to execute a position. You don't know what the price is doing. You don't know what the price is doing at the moment. Now it's up to you to take your time, see what the market is doing, and maybe you're going to get a trade at the end of the day. Now, for me as a trader, I've been in the financial market for more than 3 decades. Now, I know exactly what I'm supposed to do for me to get the trade. Now, what am I supposed to do? Am I supposed to stay at the market and maybe see what the market is doing? Or I'm supposed to maybe do something that's going to give me profit, or maybe something that's going to take losses from me? Now, just a minute, my phone is going off. Exactly. Now, as I was saying, it's really hard for me to identify and all to know what the price is doing at the moment, because it's not giving me a clear picture. It's not showing me whether the price is shooting up or even whether the price is shooting down. Now, what am I supposed to do at this point? I'm supposed to take time and see if the price is breaking the higher highs or lower lows, or lower lows or lower highs. It's up to me to give the price the time and watch the price keenly and see if the price is ranging, or if the price is going up, or if the price is going down, or if the bearish are taking control of the market, or if the bullish are taking control of the market. Now, to this point, you can't really identify who is in control in the financial market. It's really hard. I believe that is the reason as to why I got that question. Yeah? Well, for me as a trader, to this point, I can decide to take a trade or not. But where exactly am I supposed to execute the trade? Am I supposed to execute the trade to this point, or am I supposed to execute the trade to this point, or am I even supposed to execute the trade to this point, or to this point, or even to this point? Now, this is where psychology plays out. Because you can't tell me you can just come or bump into the market and just decide, you know what, I'm just going to take trades. I'm just going to execute. I'm just going to buy or even sell. It's really hard. So for me personally, what I would really do if I got this kind of a structure, I would really wait for the price to do this kind of a thing. Sorry, just a moment. Just a moment. So for me personally, what I would really do, let me show. For me personally, what I would really do, I would really wait for the price. Well, let's say the price was at around this point. The price dropped straight to this point, and then it's around at this point. Now, I don't know if the price is going to come to this point and then drop again to this point. It's not guaranteed. That's why you're being told you must have a clear picture of what the price is going to do. You might take your trade to this point. You decided maybe, you know what, the price is going to sell. Just because I saw to this point, the price was normally coming to this point. When it really dropped to this point, it bounced back to this point. Now, it's not really guaranteed if the price is going to shoot down or if the price is going to shoot up. Now, for me personally, what I'd really do, I'd wait for the price to come to this point, and then it give me a clear confirmation that the price is going to shoot down. That is what I'd really do. Okay, maybe I'd wait for something like engulfing candlestick, showing me that the sellers are now in control in the financial market, or now the sellers are in control at the particular currency. Now that is where I will take my trade. So for me personally, I will wait for the price to push up to this point and at least leave a rejection kind of a week, and then wait for the price to come back to this point, because we normally have something called force breakout. Now I'd really wait for the price to break and then come back a little bit more and then execute my trade to that point. Yeah? Now I will take my trade at around let me show you. I would really take my trade short at around that point, set my TP at around that point, then set my stop loss above my zone. Now this is going to give me 1 to 2 risk to reward ratio. If say I'm risking $10, I'm going to risk $10 for me to gain around $20. That is called risk management. Okay, now that is one reason, or that is something, or that could be the first reason as to why I'm supposed to execute to the ranging market. When the price is touching my zone, it could be the demand zone or even the supply zone, that is where I could execute my trades. Okay, another reason, another position or another point where I'm supposed to execute my trade, it's around this point. Let me explain to you. Let me show you. I want to explain a detailed thing of how you can take your trades. Now we have something called breakout. Okay, because I don't believe that the price could literally range for the longest time. At a point it's going to range and then it's going to break the demand of the supply zone, and then it's going to continue to go up or continue going down. So what I'm supposed to do as a trader, or someone who have been in the financial market for the longest time, and someone who really knows what is doing in the financial market, I would really wait for the price to push up, break this zone, and then wait for at least a pullback at around this point, and then I can really execute the market up to this point. Now, earlier alone, I told you, like, we have something called force breakout. That doesn't mean when the price have already broken to this point, it doesn't mean you're supposed to be the first person to get your trade. At least wait and see the market have already broken to this point. That's simply showing you that it's a continuation kind of a structure, that obviously the buyers are ready and they are ready to kick off the sellers, and they are ready to push up and continue buying up. So it's up to me to wait until this zone is being broken, or until this high is being broken, and I can see this kind of a thing that way. Now let me show you. Let me just draw a triangle to illustrate, to make it simpler for you guys to understand. Let me take this one. Okay, good. Sorry. Let me take an arrow. Okay, the price have been ranging to this point. Now it came to a point whereby the price had to break this zone over here. Now this is where I'm supposed to take my next position. Am I supposed to wait for the price to come to this point and then sell, or am I supposed to wait for the price to break and then retest and then take my position over here? For me personally as a trader, I would really never emphasize on you guys taking a position to this point, because you don't know if this is a force breakout. Sorry, you don't really know if this is a force breakout. So what you're supposed to do, you're supposed to wait for the price to push up, come back for a retracement, and then wait for the price to push back or to push up again, and then come back to retest this previous higher high, and at least to take your position to this point and maybe execute it and target the next higher high. Now this is what me personally I would really do. I'd really wait for the price to come back to this zone, take my trade up to that point, and then set my stop loss below the zone, and then target say 1 to 2 risk to reward ratio at around that point. Now that is what I can really tell you guys concerning the consolidation market. I don't really have much. I really wanted to answer that question from one of my subscribers. That is to show you I really care a lot about your financial market journey, and I know it's going to take a lot. For me personally, I've been in the financial market, and when I was starting, I really wanted all of my friends to join and maybe make fortune out of it, make dime each and every day. But when time is going, I can't really even advise someone to join the financial market. It's not like it's hard. Like it's not like the financial market industry, it's hard. For me, I won't really lie. In the financial market, it's one of the hardest career in the world. It's going to affect you mentally, like it's going to affect you physically, it's going to affect you either of the things you've been doing in the normal life. For me, I've been in it, and I don't think I'll ever quit on it. I've seen great things on it, and I can't really say it's a bad thing. I can't really say it's a good thing. Up to now, if you feel like you want really to join in the financial market, I can't really tell you to stop or to maybe do something else. What I can really say is that welcome to the new beginning of life. Because in the financial market, it's a really rough journey. It's going to really affect you financially, mostly. It's really going to affect you. You're really going to lose your friends. You're really going to lose anyone who's around your family, girlfriends, or even boyfriend. Yeah. So up to this point, I hope I've really explained detail to detail of how you can take a trade in the consolidation market. I don't have much. That is the only thing I wanted to answer. And whoever asked that question, thank you very much for watching my videos, and I really appreciate for that. And as I'm going to end the video, I can't really say subscribe to my YouTube channel. If you feel you're supposed, or if you feel you're really interested in the financial market journey, or maybe you may be planning to get something in the financial market, you may be having that passion, you want to do it, subscribe and stay tuned, because I'm really cooking something great. Okay, so thank you very much for watching this video. I really appreciate your effort. I really appreciate your support. I really appreciate what you've been doing. For those who've been sharing my videos, I really appreciate each and everything you've been doing. And thank you very much. So as I'm going to end the video, I can say subscribe to the YouTube channel if you're really interested in the financial market. Yep, this year it's 2026. What I can say from my mentor, $, Daniel Akurizi. Let's talk more action. I'll see you later in my next video. Ciao.